Well, I probably don't have to remind you the year end is approaching fast, and there are a few financial moves that can make a real difference before the end of the year. For Money Monday, our buddy Gary Garrison with Asset Protection Wealth Management joins us with the 5 most important things to do before the year ends. Gary, as always, welcome. Great to see you.
Thank you, Steve. It's good to see you again, and Merry Christmas. It's
You too.
almost here.
Yeah, no kidding.
As is the end of the year.
Well, we appreciate you coming in on Christmas week, too.
Yep, you're more than welcome.
Let's talk about these 5 things, because this is all great advice and important.
Well, I thought it was timely since it's the end of the year, and everybody wants to reduce their taxes. But, you know, once the calendar flips into 26, a lot of these things are gone. You can't utilize them. So if for a non-qualified, meaning a non-IRA account, you want to look and see if there's any capital gains that you can harvest. And that simply means that you can sell and guarantee that you have that gain. And the flip side of that is look for losses that you can harvest, because if there's some stocks or mutual funds that went down, you can sell those and then harvest the loss. I always recommend, because we don't do this, I recommend seeing a CPA, run this by them to see what they recommend that you do. Another thing is charitable giving. You know, we have a lot of our clients that do charitable giving, and that's a great thing. They give money to their church or a favorite charity, and it helps the city, and it's a nice feeling to do that, and sometimes you get a good tax deduction.
You bet. Great time to go to Goodwill. Take your stuff to Goodwill or whatever your favorite charity is. Yeah.
And then, you know, if you're a high income earner, check your withholding and quarterly estimates. If you've got a big raise or something, you might want to have your CPA check into that to make sure you don't need more withheld out of each paycheck. And if you've retired and you expect your income to go down, you might want to lower those estimates, and then your net paycheck would be higher. So those are a couple of things tax-related that are good to look for.
All right. Let's move on to the next one, which is max out your retirement contributions.
Man, this is one of the easiest things, and people leave money on the table every year by not doing this, and they don't contribute enough. And I understand a lot of people can't contribute anymore financially, but man, if you can, it's so much better for you. Like a 401k, IRA, self-employed SEP plan or 401k. So the minimum contribution, the maximum contribution you could do a 401k is $23,500 for a year, okay? But if you're 50 or over, they increase that by $7,500.
Oh, wow.
So now your maximum contribution is $31,000 a year. And why not take advantage of that, you know, if you can, because you want to max it out, especially if you're getting matches and things like that.
Yes.
The other thing is there's now a super catch-up provision, and that's for those that are age 60 to 63. They get additional contributions of $11,250, and so they could literally
what does that
contribute $34,000 to their 401k, and you're talking about building up a nice sum of money if you're contributing that much to your 401k.
That's a lot of super catch-up.
That's a lot of super catch-up.
For sure. to be sure, but you're completely correct. People don't prioritize that like they should.
Well, and most people don't have any help with their 401ks at work. There's a very few that have somebody they can literally call and find out about that.
Yeah.
So we help a lot of people with their 401k questions, even though the money's kept somewhere else. So we're more than happy to do that.
No question about it. All right, let's move on to number 3. Rebalance your portfolio.
Yeah, so if we've had a good year in the market, and we have, your accounts have grown faster than you realize a lot of times. So be sure and check into that. For example, if you have a rise in your stocks and your mutual funds or managed money, you might want to think about selling that, lock in those gains, and then reinvest it. That way, if the market goes down in 26, you've got what you made last year protected.
Yes.
And so that's very, very important to do. And it helps also manage volatility. People need to to really look at that, because, again, if your account went way up, you're like, oh, my 401k is doing great,
right,
and that's wonderful. But make sure that you're not taking more risk than what you originally thought now, because the stock growth have grown, and you're going to lock those in, and that's a good thing. But now it's needs rebalancing, and so we recommend rebalancing that. And then we have we can send somebody a link that they can check into that, and take a little quiz on risk, and it'll tell them if they're taking too much risk or not.
And
I encourage people to do that. I really do.
and your risk tolerance changes as you get older, for sure.
It does. Yeah, you're not stuck with the same risk tolerance. We have people do that when we have clients that come in, and every year we have them retake that exam because some of them may have had kids or grandkids, married, divorced, and you need to make sure that that's where you want it to be.
Or going to college.
Yeah, right.
Let's talk about
I know that hit a personal note, didn't it?
Right here in the wallet.
We've talked about that before.
Yeah, exactly. Let's talk about number 4. Review cash, debt, and emergency funds.
Yes, that is so huge. Everybody needs an emergency fund, and the more the better. I think the general rule of thumb is 6 months of salary you need to have. But these days, you can actually earn interest on your emergency fund, and we encourage people to look at that. Used to 0.5%, 1%. Steve would be what they could get, and now you can get 3, 4, or 5% on that. So then your emergency fund cash is keeping up with inflation, because it's earning more than inflation if you get it set up correctly. So we know a lot of portfolios, they're very safe, good emergency fund, and they're earning like 4 or 5%. So highly recommend that.
Can I ask one question to
Just one, yes.
How much emergency cash should we have? An emergency? I mean, I guess it depends is the answer. But
The short answer is the more the better.
Right?
Right? I mean, you can't have too much cash. It's kind of like life insurance. I've had a number of clients die over the years, and I take their check to them, and it's $250,000 or $1 million or whatever.
Right.
And when they bought it, they're like, God, this is a lot of money. It's too much.
Sure.
And when I hand it to the beneficiary, they're like, is this all?
Yeah.
Is there any else? So once things happen, it does change your priority. But I would say, to answer your question, 6 months of salary.
Okay, that's good.
Net salary, take home salary.
Okay.
And if you can't do that, do 5 months, do 4, whatever you can do.
Do what you can.
Do what you can. Don't shorten your lifestyle because of it.
Okay.
But do what you can.
But I like
You'll be
that as a
glad you
rule of
did.
thumb. That's great advice. All right, finally, update beneficiaries and financial documents.
Yeah, and we've talked about this before. This is huge. So people come in. It's funny. People come in. We have an attorney in our office. His name is Chris Boyd. Look him up. But people come in, they're like, I have a trust and a will, so I think I'm good. And we take a look, and we're doing our financial reviews for them, and their beneficiary designation reads differently than their trust. And trusts are great. Most people need to have a trust. That's great, and a will. But a named beneficiary trumps anything in your trust or will. So we'll be looking at that, and they'll say, oh, it doesn't matter. That was 20 years ago. I've got their name in my trust. It's solid. Well, guess what? If you have a different name than you intended on your beneficiary form, the money is going to who's on there. Beneficiaries trump a trust or a will. And so end of the year is a perfect time to go and check your beneficiaries on your life insurance, any annuities you might have, your 401ks, any bank account. Just make sure that you've got that correct and that the money's going where you intended, even if you have a trust or will.
That's all great advice. 5 things. I know after folks watch this, they may have even more questions, but that's what you're here for.
That's what I'm here for. Give us a call. Click on our QR code and give us a call. You can text us or call us at 501-225-9045, and we'd love to see you. We could even get you in before the end of the year if you need to. We'd love to help you.
Yeah, but at some point, sit down and do those 5 things if you can.
Absolutely.
Make your financial future a little more secure. Great.
Yep.
Great to see you. Have a great holiday.
Thank you. Good to see you.
Back with more Good Morning Arkansas right after this. Don't go away.